Today I'm going to show you 4 ways to unlock hidden money in your business and improve your cash flow immediately. I'm Hannah Smolinski. I'm the founder of Clara CFO Group, where we help businesses like yours create clarity and confidence in their business finances. So if you would like actionable steps every single week on how to improve your business finances, make sure you subscribe to the channel. So when we start working with a new client, one of the very first things we do is we look at the balance sheet of this client or potential client, and we look to see, is there unlocked potential in the balance sheet? So I've got all 4 tips for you today are things to focus on the balance sheet in your business. Okay, and the balance sheet, remember, that's showing you the financial position of your business. It shows your assets, your liabilities, and your equity. The first place I'm going to look all the time, and there's almost always money here, is accounts receivable. That is the first place I want you guys to look. If you send out invoices and people have not yet paid you for the services or maybe even the goods that you have sold to them, accounts receivable is the number 1 place you need to look for money, because that is the money that is most likely to come to you the very fastest. Because in most situations, if you send an invoice, that means you've already done the work to earn that money. This is basically just cash not yet in hand. Accounts receivable, and you want to think of accounts receivable like that. That is money that you have not yet received for work that you have already done. You are owed it, and it is there waiting for you. Okay, so that is the number 1 place that we look when we are looking for quick money in a business. It's probably going to be sitting in accounts receivable. So what I want to do real quick is show you in QuickBooks how you can pull your accounts receivable AR aging report. I have a video somewhere on this, but I think it's buried. So I'm just going to show you guys real quick here. I'm going to show it in QuickBooks, but this could really happen in any accounting system. You just need to look for this AR aging or accounts receivable aging report. Let's hop into QuickBooks and I'm going to show this to you guys. Okay, here we are in the sample company of QuickBooks Online. And what you're going to do is go to the sidebar, and then you're going to scroll down to reports, and you can click on reports. Now, I have the accounts receivable aging summary favorited here, and it might be favorited on your account as well. In case it's not, I want to show you what to do. So scroll down until you find who owes you. And probably one of the first things is going to be accounts receivable aging summary. I'm going to click on that and show you what it looks like. Very simple. This report will be named the same, or it might be called AR aging summary in any accounting system you use. This is a very common accounting report. And so what this shows you is it shows you the invoices that you've sent out, what is considered current, meaning that is not yet late. And then if it is 1 to 30 days late, 31 to 60 days late, or 61 to 90, and then is it over 91 days late? One time we started working with a client that had a $10 million revenue, and we looked at their AR aging and found out that it had hundreds of thousands of dollars sitting in aged receivables. And it was just something that they were sort of letting their clients not pay them. And they were not even trying to get the payments from these customers and clients. And that was kind of mind-boggling to me, because these clients could pay. They were just not taking the steps to actually go and try to collect from these customers. So it was immediate cash we could bring into the business by just doing a little bit of effort to actually follow up. So what these buckets will show you, these columns will say, this is current stuff, so these invoices are not yet due. But anything over that 1 day late plus, these are all accounts that we can go and remind customers to pay us. So I wanted to show you this report, super helpful. Let's get back into talking about accounts receivable. Okay, so with accounts receivable, follow-up is the name of the game. It's really all about touching base with a customer, reminding them that their invoice is due. Maybe they never even received the invoice. Maybe it was lost in an email somewhere. Maybe if you send paper invoices, they never received it. Maybe they're pretending they've never received it. I don't know. We're not going to say exactly what it is, but if you keep telling them, hey, there's this invoice, let me stay on the phone with you until you receive that in your email so we can make sure it gets to the right address. You know, whatever you need to do, if they're saying they haven't gotten it, you can do things so that you can make sure that they've received it on their side. side. One of the good things about QuickBooks Online is when you electronically send an invoice, it will actually tell you if it has been viewed. So your accounting system may do that too, but QuickBooks Online does that, which is very helpful when the other side says, oh no, we never received it. You can actually see like, hey, I saw that they actually looked at it about 10 times. So, you don't need to call out your customers for lying to you, but it is helpful to have that information if they've actually viewed it or they haven't. So it does give you that information, very helpful to know. Again, you can make it easy, have people pay you through electronically, through ACH or through credit card if you want to make it easy so you don't have to wait for a check. That will always get that money in faster, but follow-up is the name of the game. You want to prioritize older invoices first. Chase down those first because those are going to be the ones that are most urgent. And remember that if you need to charge late fees, that can sometimes incentivize people to decide that they're going to actually pay you. If you never charge late fees, they're going to just continue not paying you because they're not having any penalty by not paying you, and it's helping their cash flow by not having to pay you. So, you can think about what you want your, quote unquote consequences to be to these customers if they're not paying you. Interest is the thing that is most often used there. Okay, so that's going to be my first tip for you, is to go look at your accounts receivable, look at your older receivables, and figure out who needs to pay you. That is the most likely place you're going to find money on your balance sheet. All right, here's number 2, and that is inventory. Not all of us have inventory if you're a service-based business, but some of us might have some inventory, or maybe things that are just held from the past that we're not selling anymore, but we still have it and it's still sitting there on the balance sheet. Whatever it is, if you have inventory can turn into cash. You just have to sell it to somebody. So that is going to be one of the other fast ways that you can get money into your business, is to move inventory faster. That means you need to, have some incentives if it's a sale to get slow moving inventory moving faster. If you need to open up some kind of new way for people to buy the inventory, if it's old and you just have it sitting there, maybe you need to have an actual physical sale in your location. Whatever it is, you can liquidate older, slower moving inventory and move that as quick as possible. Yes, you might lose a little bit of money, but you might have to sell it at a discount to get rid of it. But if you have already bought it, that is cash that you've spent in the past. So now you're trying to just liquidate that thing and turn it into cash because you need cash quickly. That's kind of the point of this video. If you need cash quickly, I'm telling you how to get cash quickly. So you might need to take a loss on inventory, or maybe not sell it for maybe it's market value if nobody's willing to buy it. Like this happens all the time with cars that maybe they made way too much of a certain year and people weren't really interested in that model. And then the new model comes out and people are more interested in that, but car dealerships are left with old inventory, and it's new cars, but they're old. So what do? They slash the prices just to get them moving, and they've already made the investment in those cars, so they need to get back the dollars that they've already put out there and turn that back into cash, okay? So that is a good example of just getting inventory moving quickly just to get money back into the business. So if you have inventory, that is a tactic you can use to get money quickly into your business. Don't just hold on to it because you paid a certain amount for it. I think we all have a family member somewhere who has bought something that is really expensive and they don't want to get rid of it just because they spent a lot of money on it, but really nobody wants to buy that now. Moving on to number 3, assets. So if you own things in your business and they are sitting on your balance sheet, they might still have value. So if you might have old computer equipment, if it's too old, it probably doesn't have a lot of value and you probably just need to get rid of that. But you might have some furniture. You might have some equipment that could be valuable to somebody else. So if you have assets that you are no longer using to do the service of your business or provide or sell the goods that you are selling, then those might be able to be turned into cash. So you might need to post it on something like, a marketplace, on Craigslist, on, wherever it might be, but you might be able to sell those and turn that into cash. Now, a lot of us are probably not going to have hugely valuable assets that we're not using in our business sitting on our balance sheet, but I've also seen it sometimes that we have maybe vehicles that are not needing to be used anymore, or pieces of equipment that were bought for one service that we don't really provide anymore. So if that's the case, yes, it was expensive to buy that equipment, but if you're really not going to be using it anymore, it might be better serving for your business to turn that into cash rather than just having it sit there. Again, if you're not getting value from it in some other way, consider selling it. and that will get cash into your business. Okay, the fourth way we're going to get cash into your business is we're going to look at your cash. So we're going to look at your cash and say, am I earning interest on this cash? Because if you have cash sitting in your business, we are in a time in early 2025 where most of us have access to a high yield savings account. So they should be earning somewhere to 3 to 4 to maybe even 5%. 5% are like not really happening anymore. Maybe you can get a little promotional percentage for 5% for a little bit, but we are seeing interest rates between 3 and 4%, pretty standard on high yield savings accounts. And if you have extra cash, you should be putting it into a high yield savings account. And that can produce a couple extra $100 for you every single month, or in like thousands of dollars over the course of a year. So depending on how much cash you have. So don't just let it sit there idly. And you might be super loyal to your bank and you love it so much, and that's great. But if they're not giving you any interest, you need to take your cash and put it in a different place if it is going to be serving you and making you money. Strategically, that would be a wise thing to do. I can't tell you what to do. I'm just a YouTuber, but I am a fractional CFO, and we help clients with this all the time. And we help them find, a good savings account to put their money into. So you can have your money in one bank that you love using for lots of different reasons, and then it's totally fine to have another savings account with a different bank that you could earn some interest on. That's totally fine. So I hope I've given you a few things to think about when it comes to finding extra money that's already there in your business. We are coming up on a time that I know some of you are feeling cash strapped. So my videos right now are really just responding to the current economic climate and also hoping to help you guys, weather any potential storm coming. So if you aren't subscribed to the channel, I would love to have you here. If this video was helpful, please give it a thumbs up. All right, see you next time. Bye.